Axis Bank's Q2 FY21 earnings report was one of good quality, prudence, measured growth and readiness to take the leap as the environment gradually limps back to normalcy. In our Ideas for Profit today, I'll discuss what should be investor strategy on the stock post the Q2 earnings. Well, the operational performance was quite strong with the sequential jump that was seen in the net interest margins by 18 basis points. Non-interest income also threw a positive surprise with a sharp sequential surge. Core fees grew by 67% sequentially, with some of the heads like the third-party distribution as well as the transaction banking actually surpassing the pre-COVID levels as well. Now, the tight leash over cost resulted in the fall in cost-to-income ratio and took the operating expenses to asset ratio to 1.97%, below bank's target to 2%. Now, reported gross and net NPA at 4.18% and 0.98% also showed a decline sequentially. In fact, the reported gross slippage in the quarter at 931 crore rupees was the lowest in the last several quarters. Now, the provision coverage has also risen to a comfortable 77%, and the bank is carrying excess provision to the tune of 10,839 crore rupees over and above the NPA and standard asset provision. Now, with collection efficiency of close to 94% in September and 97% in October, the worst of the bad asset problem may be behind us. Now, the overall loan book actually grew by 10.5% year on year, with the TLTRO or the targeted loan term repo operation investments was 14%. Retail with a share of say 53% and corporate with a share of 36% also grew by close to 12%. Now, there is a distinct shift towards high quality for corporate as well as SMEs and secured products in retail. Of the unsecured book, which is close to about 11% of the bank's advances, a large part is to the salaried class and to banks' existing customers only. On a quarterly average basis, while overall deposits rose by 13% year on year, the retail term deposits plus CASA, that's current and savings account, with a share of 84% grew at a faster pace of 20% year on year. Now, Axis Bank had raised 12,500 crores by way of QIP in September 2019, and again a further 10,000 crore rupees was raised in August of 2020. So it does have a capital adequacy ratio of 19.38% with a core CET1 at 15.38%. Now, given the worst of COVID-19 impact on the economy behind us, Axis Bank's solid asset quality recognition, provisioning policy and significant excess provision does put it on a firm ground. Now, the optimism is also evident from the fact that the bank is effecting a salary hike from October onwards. Now, with adequate capital and superior liability, it is in a vantage position to accelerate the growth pedal post-COVID. Now, seen in this context, the valuation is extremely attractive, especially for finding a place in the long-term portfolio as well. We do expect a steady re-rating of this bank as it delivers on a measured sustainable growth and comes out a winner from the COVID mayhem, making it a kind of a one must stock in your own portfolio as well.